What is going on, guys, and welcome back to the Young and Intelligent Money Investing channel. I'm here during active hours trading, and today we are going to talk about value versus growth investing. Now, this is a topic that I really didn't understand when I came into the stock market. I always just assumed that you want to get stocks that are undervalued compared to their competitors and what they could do in the future. But there's really more of a system to this because there's really two different types of stocks, and then a lot of stocks fall in between, but there's really two extremes, and that's going to be growth versus value. That's what we're going to talk about today. So I'm going to start out by giving a couple examples of growth versus value. And one example I have here for growth is going to be Amazon. So a growth stock essentially is a stock that trades at a really high price to earnings ratio because of its potential in the future to have really high profits and be able to pay back its shareholders with high distributions and stuff like that. As you can see here, Amazon has a zero dividend yield, but it has a P to E ratio of over 300, which is insane, meaning it trades at a 300 times valuation to its annual profit. So essentially what that means is the reason people want to get into this stock is because Amazon is everywhere right now with its acquisition of Whole Foods. It owns Twitch. It has so many e-commerce revenue sources. So they really want to get in here because Amazon's taking over. So if you can get on that and it just continues to expand, the larger their market share is, the more profit based they can go. And largely, a lot of their profits are getting eaten up by these single time investments and stuff like fulfillment centers and like the new headquarters that they're going to build. So their profits are going to be low, but what investors really care about here is the revenue, and the profits will come later. Another example is going to be a company like Snap. Now, Snap has a similar story to Amazon, but they aren't even making a profit yet. Their dividend yield is nothing, and their P/E ratio is nothing because it's literally negative. Now, if this was just a normal company, they wouldn't be worth almost anything, and you'd be thinking they'd be going bankrupt soon. But since Snap has so many investors behind them and a lot of potential because of their huge user base, people think that there's potential for future earnings there. Now, this varies from something like a value stock because a value stock is one that you want to get into because you think it's undervalued compared to the market and because it's going to kick you back dividend yields, something like a GM. Now, GM trades at $42, and it only trades at a 9.5 PE ratio. That's really low compared to what we were talking about before. And people might think GM is a value stock largely because of like the autonomous vehicle thing and all that's potential to really shoot up in the market. And this thing has a 4.3% dividend yield. So you're going to see a correlation between value stocks and low dividend value stocks and high dividend yields versus growth stocks and really low dividend yields. So this trades at a 9.5 P to E ratio. Then we're going to look at is Ford, trading at $12 right now, almost a 5% P to E ratio and 5% dividend yield and an 11.5 P to E ratio. So similarly here, it's a high dividend yield, low P to E ratio because people don't really see as much potential for Ford to have a bigger market share or do that much more profit than they do now, especially not compared to something like Amazon or Snap when they could multiply their profits. But Ford is people really see as kind of having hit a cap, so they're not willing to throw money in it with the speculation that it's going to be big in the future. And so basically, that's kind of what growth versus value is. And I more so enjoy the value stocks. I have a hard time getting behind stocks with really high P/E ratios unless I really believe in what the company is. And for me, this is largely a tech space that the growth area is, and I am just not super tech based. So when I see a tech stock and I don't like understand their business model and how they're going to continue to have increasing revenues and profits over time, I can't put a lot of money behind that. But when I see something like a GM or a Ford, or maybe a Reed or something like that, maybe a Berkshire Hathaway, an Apple, honestly, has been a little bit of a value stock because it's been undervalued compared to other techs. When I see something like that, I can get behind that because I know Apple products, I know Berkshire products, everything like that. All right, so I hope you guys enjoyed this video. Leave me a comment saying what kind of investor are you, growth versus value. All right, thanks, guys.